like flipping through this deck and I'm like, oh my God, like this is the best idea I've ever heard. Like, this is insane. Like I need to like at least find a way to get an angel check into this thing. This is crazy.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show.
Suze, thank you so much for joining me today. Super excited to chat with you. All right, Suze, you are the Chief Operating Officer at Inversion. Inversion is a private equity firm that acquires traditional businesses and increases their value and efficiency via integrations with blockchain rails. Previously, you were at Goldman Sachs, where you started in emerging markets, and then you went and helped build the team on the digital asset side. All right, so I think you spent 6 years at Goldman. Can you tell me about your experience there? Yeah, because obviously, I have tons of questions. There's some things you can reveal, some things you can't. But tell me, like, how was your time at Goldman Sachs?
Yeah, absolutely. Thanks, Andrew, and super glad to be having this conversation. So yeah, that's exactly right. So I started my career at Goldman in the emerging markets fixed income group. Think of like a traditional markets trading desk, mostly traditional, somewhat funky and bespoke because emerging markets fixed income is obviously a more, I guess, like on the risk curve. It's a higher risk product. It's a little bit newer. We're not talking about products that have existed in, for hundreds of years. The desk at Goldman, and for most of Wall Street got built out around, in the early 2010s, late 2000s. So kind of like a new frontier product. Super exciting because you get a ton of breadth. You can see into all of the emerging economies. Think of most of LATAM, Southeast Asia, Central Eastern Europe, some Africa. So there's a lot that you can kind of cover there. It was awesome for me just to get exposure to that high risk environment, and also, see a world where the macro and the political side actually drives markets in a really fundamental way. And in many ways, that actually ties back to where I am at Inversion now, as we focus on Latin American markets, and that was what I spent most of my time doing. So we'll come back to that. I did that for the first 2 years, the emerging market side. And then it was in 2021 that Goldman decided it wanted to build out the digital assets business. And, you remember 2021, it was super hyped up. Everybody was jumping on the bandwagon. And so, Goldman was earlier to the movement, I would say, actually, in fairness, because the CME futures on Bitcoin and ETH came live. And that was an institutional TradFi product that Goldman could get involved with. But in 2021, it was getting like formalized. And so I joined on the very earlier side. The team in New York was like 3 people. That was in 2021. And I was the only person with a traditional markets background. A lot of people came from a strategy background, like a corporate strategy, or a banking background, investment banking, meaning they cover corporates and do like M&A transactions and advisory. But I was the only one that actually had experience working with hedge funds, asset managers, a variety of different products. I had insight, in the EM side, I did FX, interest rate swaps, cash bonds, sovereign bonds, meaning bonds that are denominated in dollars, local bonds, meaning bonds that are denominated in the peso or a local currency, options, swaptions, like everything across the board. So I had a lot of insight across the market side. And I've ultimately got effectively tasked with building out, okay, there's this crypto thing. We have institutional investors and clients that care about it. Like, what do we do? That was kind of my mandate when I joined digital assets at Goldman. And so we truly built it from the very beginning, where there was nothing. And over the subsequent 4 years, until I just left a few months ago, we built it into a very robust business. A number of different businesses fitting under the crypto business. An important nuance here is obviously that banks can't do physical crypto, right? So you can't, when I say like crypto business, I'm using that term a little bit vaguely. We didn't trade crypto, right? What you've heard about the banks is not a lie. They really can't do it. And obviously the regulatory landscape is just starting to shift now, which we can talk about. But what we did was we looked at where is the area that we can live. What is the space between regulation is here, compliance is here. We're obviously going to very clearly adhere to that. But client demand is here. And frankly, like a lot of institutional clients at the Goldman Sachs caliber, they're not super focused on like actually being able to trade physical Bitcoin. They have their own reservations about that, right? Which has very much evolved over the time that I was there in terms of their willingness and interest to touch the space in a physical way. So we built out a business in the space between those two things. And so it was very TradFi, very vanilla, but at the same time, very real and very robust. And, I won't go into details in terms of, the actual businesses that we built just because I'm not there anymore. So, I don't think it would be appropriate, but yeah, I'm happy to kind of talk about what that looked like and the anecdotes.
Were you assigned to this role, or hey, Suze does emerging markets, she'll get this, or did you want it? Because I assume, like, I don't know, 21, probably the reputation of crypto still like wasn't great. So how was that?
Okay, so I should cover that part, how I actually got into the digital assets, how I made that jump. Because the ultimate answer is that it was, I guess, by choice and by natural fit. But the background on me was that I had studied computer science in college. And so around 2015, I was super, blockchain technology was in the podcast and was bubbling up in the newsletters and whatnot. And so I got super excited about blockchain technology. I thought it would be really cool for specifically security. And that was like fixated on like blockchain for like physical security, like your car being locked and things like this. So very deep in actually in a lot of ways. That was kind of what I was excited about. Crypto didn't make a lot of sense to me. Bitcoin sort of did, but it was really there that my journey began. And I followed the space really closely, really dove into the tech. Like I said, my angle was from a technical lens. And so, followed that. It wasn't until like 2019 and COVID, like DeFi summer times, that I got super excited about DeFi. And the way I like to describe that is, is the only type of gaming that I ever liked. Like I wasn't ever a gamer, but DeFi felt like gaming to me, like 80,000% APY on Wonderland and like stuff like that. It was just like, kind of like, what? Like, how is this happening? It's crazy and it's fun. And so that was kind of how I got into it. After that, when I was on the EM desk, on the emerging markets desk, I was like going to the conferences and just like taking a day off work to go to conferences. I was super pilled, super excited. I was known on the desk as like if you had questions about crypto, you'd ask me. And so it was kind of a running bit, right? In many ways. And so when they started the digital assets team, I had a number of people say like, hey, look, you should kind of look into this. They're hiring people, they're trying to build it out. And that was how I got over there. So it was when I got over there that my boss at the time was like, what do you want to do? And I had a lot of different ideas, but I thought that where I could add the most value, and not just for myself, not just for the team, but frankly for like the overall ecosystem, is building out a business that caters to the institution that is dipping their toes in, doesn't want to go all the way in, only wants to talk to Goldman Sachs as a counterparty, but still wants some form of exposure.
Yeah. So, of course we have to be careful about, what you reveal here because you're not there anymore. But so what can you describe like the types of products or companies that were interested in this crypto exposure through GS, or do you have to be more vague?
Yeah, I mean, I guess what I would say, I mean, there's public information. So I'll just share what you could easily Google, right? Because then it's not really my personal experience. You could Google and find out about, Goldman's cash settled Bitcoin and ETH options business. So think in the flavor of cash settled derivatives, right? Like the banks, what they really excel at and what they, make a lot of money at, you'll see in any of their earnings, is derivatives, right? And so we leaned in on cash settled derivatives where you could have exposure to the appreciation of Bitcoin or ETH in a pretty unique format, in a format that a lot of clients like. They like options, they like the basis trade, right? And so we could actually offer that and deliver it in a cash settled way where no one actually has to touch any Bitcoin or crypto or anything. No one has to worry about custody risk. And so that was kind of that was kind of the primary business. You could also Google that, the firm made a cash loan secured by Bitcoin in a tri-party arrangement. And so if you think about like what Cantor has just decided to do, Goldman actually was, doing that in 2022. So yeah. So that's just to give you an idea, and all stuff that is very publicly available. In terms of like who does this stuff, look, I mean, what I would say is it the evolution, you really cannot underestimate the evolution and the life cycle that we went through, from 2021 and early 2022, actually super busy. Everyone wants to know, everyone wants access, everyone wants to figure out how they can, how they can get involved. And to be clear, when I say everyone, we only, the firm Goldman doesn't really have a retail business, right? So this is all institutional. So yeah, like there's tons of it follows the normal hype cycle, right? That's the bottom line. Like there's hype in the market. Traders at every buy side firm, they feel that and they see that too. And so it's just, that it's playing out facing their traditional counterparties. And then you have the lulls, right? Then you have post FTX was crazy. There were a lot of people asking questions like, is there going to be a systemic problem here? Is there going to be fallout in traditional markets, that are going to stem from this? And my answer was like resolutely no. Like FTX really did not have creditors or balance sheet that was tied into the traditional finance ecosystem in any material way at all. And so I didn't anticipate any kind of systemic thing in equities or anything like that. So yeah, I mean, followed a lot of life cycles, a lot of evolution. Look, what I'll say is the ETF, I think, made huge waves for the institutional investing community. The fact of the matter is, there's a big concern around like just forget about TradFi, forget about crypto. There's something backwards feeling when you have a large institution with a large balance sheet that is reliant on a much smaller institution with a much smaller balance sheet, and that relationship is a dependent one, right? And so like, if you put that framing into context of a bank or asset manager or a huge hedge fund facing off with a centralized exchange or a decentralized exchange, there's just something that doesn't sit right in the buy side context in that relationship. It just doesn't work. And so that's kind of where the blocker is. And the ETF has disintermediated that in a major way. And I think the other thing about the ETF is it scratches the itch that needs to be scratched. Like the institutional investors, in my experience, they're just not at a place where they care about DeFi. They're not at a place where they even care about Solana, right? I mean, just a little bit of interest in Solana was kind of percolating. And ETH, right? Like ETH is totally, I think, left behind in a lot of ways. So I think the ETF, in a lot of ways, it legitimized the industry. It made it so institutional parties feel really comfortable investing in Bitcoin, at least. Obviously, the ETH ETF didn't take off in the way that the Bitcoin ETF did. And it gets them what they want. Like the Bitcoin story makes a lot of sense because not for any, ethos reasons, right? Not because they love Bitcoin and hate ETH. No, this has nothing to do with that. The fact of the matter is Bitcoin is, for someone that comes from a finance background or an economics background, Bitcoin is a very monetary policy aligned asset. Like that's what it's about. An investor gets this. Someone with a finance economics background, they get this. ETH is way more complex. All the other tokens, for the most part, are way more complex. Like there's tech, there's decentralization, there's building applications, there's smart contracts. Like that is an asset for, I think, like a growth investor, a tech investor. And I mean, I think eventually traders and investors will come around to view, Ethereum and other assets, other non-Bitcoin assets, non-Bitcoin cryptos as interesting for what they are. But there's just a huge chasm that has to be crossed to get there. And they have not crossed that chasm.
What's your personal opinion on how Goldman sees digital asset landscape? Like, is it a new product they can sell to lots of customers, or is it more of like, oh, eventually we're going to be running our whole infrastructure on these blockchain rails, or and we're super bullish on the infra side, or how are they viewing the crypto digital asset landscape as like a whole?
I would love to comment on that, but because I'm no longer there, I don't want to step on any toes. So I won't talk about how they think about it. What I would tell you is, Matt McDermott is the global head, and he has a lot of really fantastic, really fantastic materials out there. He's done a lot of speaking, and I think what they do well, what I'll say about what they do is they think about blockchain and they think about crypto. And in a lot of ways, for like traditional finance, moving away from like trying to give any opinion on how Goldman thinks about things, I think in traditional finance, people don't really appreciate the extent to which you have to think about blockchain as, or tokenization, right? Whatever word you prefer, as different from crypto. Because like for TradFi, there's blockchain and tokenization, which is like, we're going to optimize for our costs. We're going to have more efficient systems. That's one story. The other story is we're going to speculate. We're going to dig into technology. We're going to trade this versus that because we expect appreciation or whatever. And we're going to make money. Right. And it's like one is saving money and one is making money, and they're very different workflows. And so my background is, very much on the making money and the crypto side rather than the saving money on the tokenization side, but they do a good job of thinking about both. And I actually don't think that is specific to Goldman. I think that is that's across TradFi. You see a lot of firms kind of doing that the right way. Maybe they're focusing on one more than the other, but most shops are clear that there's kind of parallel tracking systems, and allocating resources accordingly.
Can you tell me how you discovered Santiago and his vision for Inversion? Like, was he, I know he's announced it publicly. I had him on the pod and whatever, and we spoke deeply about it. He's been very vocal. And he said, like, hey, I'm looking for great people to join me. Did you like hear through the grapevine that, hey, there's this guy doing this thing, or did you know of him already? And what was your first take on that vision? Because when he was even telling me, I've been in crypto for 10 years, I was like, oh, that's interesting. I've never heard of something like this. And it took a while for it to click, but maybe for you coming from TradFi, maybe you're like, ooh, right away. Like I get it.
It definitely clicked right away. What I will say is that I really loved Goldman Sachs and I loved my job. I had a team of 5 people. I was, building out the business between the US and EMEA. And that was, also with the regulatory context, it was like, wow, this is the moment. Like we can really break out. And so I was not in the market by any means. I did like know about Santiago just because he has a very public presence. I hadn't met him. I hadn't gotten to know him prior to being introduced. It was the head of, Morgan Krupetsky, who runs a lot of the business development at Avalanche, who introduced us. And first she actually just floated the concept of Inversion to me. She like sent me his tweet and was like, this is something that you should look at. And I was like, I'm not going to a startup, like definitely not going to a startup with some like Twitter famous guy. My Goldman Sachs showing. And I was like, don't bother. Like, I don't want to waste his time. Don't bother introducing me. Like, I'm busy, whatever. And she introed me anyway. And I didn't even pick up the Telegram chat, I don't think, for like a few days at least, until Rob Haddock at Dragonfly, he emailed me because, I worked with him at Goldman. He emailed me for my Goldman invite and was like, hey, like, this is like sort of a TradFi crypto mix. You should look at it. Like, is Goldman interested? Is there anyone strategic partners in TradFi that could be interested? And I'm like, in my mind, I'm seeing this for the first time. I'm like flipping through this deck and I'm like, oh my God, like this is the best idea I've ever heard. Like, this is insane. Like I need to like at least find a way to get an angel check into this thing. This is crazy. And the last slide is like Santiago and his profile. And I'm like, wait, this is the guy that Morgan introduced me to. This is the opportunity. So needless to say, I go back to that chat and I'm like, hey, yeah, okay, we'll talk. And look, it is a combination of like, yes, the idea is extraordinarily ambitious and bold, and yet somehow so elegant and simple and straightforward, and yet solves the biggest problem in crypto, and yet no one in crypto has thought about it or attempted it to date. Like, truly, I hope this podcast is a platform for anyone to tell me if that is not the case and if someone has tried this, because I've scoured the earth and And I don't think anybody has. And what I love about it so much is, I mean, first and foremost, I can't say enough good things about Santiago. I think, we did not take lightly the marriage that we have effectively entered into, right, as business partners. That's the most important thing, right? And so you have to have confidence in Santiago, in Santi, and you have to believe that he is the guy that can kind of pull this off from the founder seat. We took like 4 months to work together, and what we like to say is bring the expectation as close to reality as possible, and effectively just like kind of pressure test each other, our ability to be compatible and work together, but also like the risks of the business, where I would actually be able to add value, how I'm going to be able to step in, what am I going to be doing in day 1, 2, 3, month 1, 2, 3, and beyond, and make sure that that fit is like totally seamless. It was a big risk for me to leave Goldman, and it was a huge risk for him to make his first hire. And so I think both of us were super on the same page of just wanting to de-risk that as much as possible. So I think we did it right. Like, I think, the seamlessness from, the interviewing process to actually joining him has been perfect, truly. And he's just an amazing person. Like, how many people can you think of that have been extraordinarily successful in crypto, that have a huge platform in crypto, could do anything they want, right? And yet will operate with extremely high integrity and a no-nonsense attitude and approach to business. So he is like the ultimate white whale, in my opinion. And also, he's just a great guy. Like, he's super fun to work with, super nice, super encouraging, obviously super smart. I'm learning from him all the time. So I can't say enough good things about Santi on his own. And then, the business, like, my first thing, because at Goldman, like, the first thing that you did when we would like underwrite any new business that we wanted to undertake was basically like, what are all the risks of this and what are all the mitigants? And so that was the first thing that I did with Inversion, was like outline, where are all the ways that this could go wrong, and like, how are all of those things mitigated? And like, and what I like to say is, there's not really much assumption risk. We're not making a lot of assumptions that we can be successful based on if XYZ needs to happen. You know what I mean? Like, it's all about execution risk. It's the main things I was worried about was, I'm a Goldman, right? This is my perspective. I know that startups are hard for us to face for the reasons I described. And so my concern was, this is a startup that's going to be trying to get into pretty significant private equity deals. Why would any management team, like corporate management team or any bank, take us seriously? Obviously Santi has what he has, but it's pretty crypto centric, and if anything, that's actually a detractor for many of those guys, right? And so that was one concern that I had. Funding it is obviously another thing. And so, I could go down the list. I won't waste the time doing that. But there was like a list of, call it 30 things that I thought were like, these are big break points. And we just went down the line together and mitigated, figured out what the mitigation was. And that was when I realized that there is not assumption risk. It's, are we the right team to execute the vision? And that's ultimately like what I have total confidence in.
All right. So the thesis is just actually, I want you to say, what is the thesis exactly?
So the thesis is, on the private equity side, right? It's not a secret. If you talk to anyone in private equity, there's a problem in private equity and crypto. I'll back up and say it that way. The problem in crypto is that we have transformational tech and we have limited adoption. And look, we have stables, they have product market fit now, that's great. But I'm sorry, like 30 to 60 million users on a monthly basis doesn't hold a candle to ChatGPT's like 500 million, right? And we're talking about a 10-year-old product versus a 2-year-old one, a 3-year-old one. And so that's kind of the problem, is crypto's go-to-market has not been extraordinarily successful, not nearly as successful as the tech warrants, especially based on where the tech is now. Like 4 years ago, and I'm sure Santi has said this, many times as well. Like 4 years ago, you couldn't really say that. You could say the cost is not there. Like Ethereum is, costly, it's slow, it's challenging to use, the UX is bad. But like, that's not the case anymore. Blockchains are great. They actually work. We've iterated on the tech and the tech is good. And yet the product and the go-to-market doesn't match that. And so like, that's problem one. Then when you think about private equity, right, you have a very saturated strategy that relies on a lot of leverage and financial engineering, for lack of a better term. And the financial engineering and levering to produce a return profile is just a very oversaturated bet. And because there is so much money moving into privates, the exits for these companies are shrinking. The exit opportunities are shrinking. And so private equity on its own has some, structural constraints, I would say, structural issues. And so how we think about this is like a marriage between private equity, buying businesses and driving value, and crypto as a go-to-market strategy, right? Crypto as a private equity strategy, ultimately. And so our thesis, our vision and our mission is to acquire companies and effectively generate operational efficiencies, drive operational efficiencies by plugging in existing blockchain tech, decentralized technology. And we think this is a marriage between a tech that exists and wants to be used and companies that are inefficient, whose management teams want to make them more efficient, but often they use leverage instead of using frontier technology, mostly because they don't understand the frontier technology. And in blockchain's case, they don't have a good case study to look at. If you are a finance firm CEO, right, like a consumer lending platform, or on the deep end side, like a telecom operator, telecom CEO, you can hear, or like anything that would relate to deep end, you can hear the blockchain pitch, the Helium pitch. And that's fine. But ultimately, like, you will have to lay down your sword and say, I don't know the constraints of this. I don't know how to run the playbook. I don't know how to do the roll out. I don't know who I can trust to help me because I don't have any network in this space. And ultimately, the most important thing is I don't have any proof that this is actually going to come out on the other side and make me not look like a total idiot as the guy that implemented blockchain and crypto and, ultimately just failed, right? You don't have the conviction that you can do this because there aren't case studies that exist. And so the pitch for us is there's a lot that decentralized technology, blockchain technology can do for a lot of these companies. We're really excited about finance as a sector and telecom as a sector, given the deep in angle that I mentioned. And there's other sectors as well that we're looking at, but you can't boil the ocean. We have to narrow our focus as much as possible. So we're starting with telecom actually. And the reason for that is just that telecom trades at a much lower multiple or valuation than finance companies do. So acquire the company at a more attractive valuation, plug in the tech, and you do two key things. You reduce costs, but you also scale the user. If you acquire a business that has a direct relationship with the consumer and you migrate their backend architecture to a decentralized system, you can actually scale that user to other products and services that exist on chain as well. And so for telco, what we really like is you acquire a mobile provider, which is a low margin, unsexy business, but it does have a direct relationship with a lot of consumers. And you cut costs significantly because of the decentralized Wi-Fi offloading that you can get with Helium's business model, or the deep end story. And then that's like part one. And then part two is you engage that end consumer in a really unique way that you are only enabled to do because they've been like migrated effectively on chain, if you will. And so that looks like fintech. That looks like turning a mobile user into a fintech consumer. And layer on top of all that, we're focused in Latin America, where this makes a lot of sense to the user. This is not completely a new idea of bridging fintech and telecom. This is not like we're not inventing this. There are a couple other case studies out there of like LATAM groups that have cornered or attached fintech and mobile, if you will, or used one to get into the other. And so that's not new. The way that we're doing it is new, and it's lower cost and it's more scalable.
So I thought that Santi, when I spoke with him, and this is still early, so I thought he was planning on launching their your own specific chain for the actual firm. Is that accurate? Because I think you mentioned that you're going to plug into existing blockchain networks.
Yeah, important differentiation. So when I talked about like the part one of the strategy and the part two of the strategy, the part one of the strategy is where we're using existing tech. So the telco playbook, the cost reduction. When we are going to plug in a technology to reduce costs, that's going to be existing tech, especially on the telco side, right? We're not going to go reinvent the helium wheel. There's no need for us to do that when we can increase, when we can reduce COGS by, call it 50 to 90%, by basically implementing helium's network, instead of what a telecom company currently uses. So that's where the existing tech comes from. And that's part one, importantly, because let's just stay on the telco sector. The number one thing is we do own this asset, right? You can't forget that we do own a company, and it might be a very large company. And in that case, there's a lot of users that you're responsible for. And if you give them reason to churn, then you have a problem before you've even gotten the fintech story started, right? And so for us, it'll be really important to integrate that, deepen existing tech, make sure the user churn is totally stable. And then that's call that part one, cost reduction, existing tech, deepen story. The part two is scaling the user into new products. And that's where our own chain comes in. And so the plan there is, we're going to avoid reinventing the wheel as much as possible. We're going to offer let's call it a company that has 50 million mobile users. We're going to make a real play at onboarding all of our acquired 50 million users to our fintech application. And what's so elegant about this is it's a decentralized architecture offered through a centralized onboarding interface. And so all the ugliness and hairiness of decentralized onboarding experiences that I think a lot of users have been turned off by in crypto historically, we're doing away with that. We're saying we are your mobile provider. Now we are your fintech provider if you want us to be, right? And so you can seamlessly onboard. We already have the KYC data. We already have the information on the consumer that we need. And so you onboard that user into a digital wallet app, a mobile wallet app, and you offer them stables. Do they need to know that they're stables, or you offer them lending, right? There's a huge, Latin Americans are starved for credit. It's amazing. And that's in large part because there just hasn't been a good way to underwrite, users for credit historically. Owning a mobile business is a great way to underwrite consumers for credit, right? So again, this flywheel just goes on and on and on. Point being, because getting back to your question about our chain, we're onboarding them to a centralized user interface. We have a lending app. There's a stable there. Is it our lending app or is it Aave on our chain? Who's to say? These are things that we're going to iron out later. Is it our stable, or are we white labeling or having stables come over and integrate? Again, these are things that we are working on. But the chain is important. And the reason we're doing our own L1, because we've gotten a lot of people ask, why do you need to do another L1? I mean, people have a lot of L1 fatigue. It's clear. And the answer is not, oh, well, the tech isn't sufficient, right? We need a new L1 because we need to do the tech differently. Not the case at all. The tech is great and we don't need to iterate on it. In fact, the Avalanche ecosystem allows you to easily pull out your own layer one. You have sovereign block space. You have an autonomous chain that you control. And so the reason why L1, why chain, is one, we don't have to deal with the downside of bootstrapping new tech from scratch. Avalanche ecosystem affords us tech out of the box, which is great. The reason why we have to do our own L1 is we're bringing the most scarce resource on chain, a real user, a user that doesn't care about crypto, right? And so if we're going to bring 50 million of those users on chain, why would we do that on somebody else's chain, right? We truly believe that we're going to run this playbook over and over again. We're going to monitor user churn on the telco side, and then we're going to bring those users into a fantastic fintech experience, and it's going to be decentralized. And they're going to get a lot of things that they want from our fintech app, which I mentioned as a centralized onboarding experience, but it is going to be up to the community to bring them other opportunities on our chain that are beyond the app. They're going to want to use they're gamers, right? They're mobile consumers, they're gamers. Gunzilla, MapleStory. These are things that they will want to have. And those are, examples of, gaming specifically, but you can, let your imagination run wild as to when you have a captivated user on chain and we're offering them, like, they can leave our app. That's totally fine, but they're going to stay on our chain. And that's also, I think, like, solves for a lot of operational friction pain points, and logistics, just with users having to hop and things. Just hurts the user when that user is not crypto native.
I mean, I just love the idea that you guys aren't reinventing the wheel or kind of any new technology necessarily. It's, hey, all this stuff exists now. What we're doing is we're plugging in a very unique way that just adds value throughout the full stack. And yeah, I think that, you know, right now we're talking about telcos and helium and whatnot. Are you guys limited on the target markets or the sectors based on which DePIN projects or like crypto infrastructure projects have been successful? For example, like let's pretend this is a very dumb example, but there's a new DePIN that does like drone delivery or something like that, right? It works really well. It makes drone delivery great and easy, whatever. Would that now suddenly open up as a target market for you guys to enter because of that infra is there?
Yeah, absolutely. I mean, 100%. Like I said, with the cost reduction, with the stage one playbook, we're not looking to reinvent any wheels. And so the way we think about sourcing is, you know, is like top down and bottom up. Top down being, what are the industries that are most ripe for disruption via, decentralized technology, and then go from there and find out who's the right tech to plug into this sector, right? And we can kind of go from there. Bottom up is what you just described. Is what is the tech that has been really successful? Like, the tech really works. And like so much of crypto, the supply side is there, right? But the demand side is not. They can't convince the users who don't know crypto to come use the funky crypto app, right? They can't convince the institutions to adopt because, again, they're scared. And so the bottom up is really cool because we get to work with teams like, a drone delivery team, tech, and say, this really works. Like, cool, we can go find a logistics company to match you with, and we'll go buy your distribution for you and effectively be the best possible business development distribution engine that the world has ever seen, right? I like to think of it that way. So yeah, we definitely think of it both top down, bottom up. And I would say, for in the early days where we are right now, we can talk about kind of where we are, how many companies we're looking at, but just with a small team, we're trying to stay as focused as possible and spend our time in the highest impact way possible. And so we're not doing a lot of, like, we just raised capital. We want to get the thing going. And so I really look forward to a day where it's like right now we're like making the first acquisition. We're diligencing it from a financial perspective, like the actual, attributes, the financial attributes of the company. But we're also diligencing it from a telco perspective. Is the helium rollout here actually going to be effective? Like, what do we need to expect? What do we need to get down to, like, the exact cost savings that we're going to achieve and all of the assumptions that we're making in order to get there. Execution assumptions, right? Where is the market for data that you offload to a helium hotspot? How much does someone pay for that? This is ultimately really what we have to solve for and make sure that the acquisition that we make is pressure tested against that. And then third, financial attributes, telco, fintech, right? Who is the consumer that we're competing for? What is the competitive landscape in that user's country? What is the regulatory landscape in their country? What are the user behavior trends? And that looks very different if you're looking at a Mexican mobile company or an MVNO, in other words, that has 50 million users versus a Peruvian one with 10 million versus a Brazil one with 30 million. It looks totally different. And so right now, in for the sake of just getting this thing going, we're really trying to stay as narrow as possible. And we really like telco to start. We really like Mexico to start. And so, we're looking at other countries as well. But we really like, telco in Mexico to start. But I cannot wait for the day where we have, a portfolio of 100 companies and we have 1 billion users on chain, and we can just sit back and just look at oh, sweet, like drone tech. Let's go find the company that matches that. That's really going to be so much fun.
How are you sourcing these different opportunities? Like, do you guys have like brokers or something like that? And then also, when you guys get introduced, are they turned on or turned off by the fact that you guys have some sort of crypto component to your business?
Yeah, communicating the message has definitely been a mixed experience. I would say for sourcing, it's not been a mixed experience. For sourcing has actually come very easy. It turns out between my network and Santi's network, and just like a lot of amazing advisors and investors and people who care about us, and their networks, like the third order networks, I guess. Sourcing has come really easily to us. And it depends on the sector, right? When you're looking at telcos in LATAM, aside, putting the helium and the Deepin playbook aside, these are not sexy assets. These are not super in demand competitive bidding processes by any measure. And so, and in many ways, like I think that if we were a vanilla PE shop, I don't know why we would necessarily go after this asset. We're going after it because it's a beautiful entry point to bring a user into a fintech, and because there's a very cool deep in story that we know how to execute on. So I think, like, as far as pitching the management teams and pitching the sell-side banking advisors on us and on our propositions, to acquire these companies, it depends on the sector. Like I said, we're lucky right now. It's fairly easy. I think, like, they're excited that we're excited, and that's kind of, they're open to hearing how we're going about it. It's not a competitive process. I think if it were a hyper competitive process, which you'd probably see more of if we were focused on finance for our first sector, then yeah, it'd probably be a lot more painful. But for now, the management team conversations that are just kind of in their early days now, and the banking conversations that we've had and the sourcing has come really, really easy.
And when you are talking to these management teams and you're telling them, hey guys, through, our know-how and the technology that we're going to integrate, we can increase, revenue by, I don't know, 50% or whatever crazy number that you guys are throwing out there. Are they like, I assume that number is much higher than what they've heard previously. So are they like, oh man, these guys are definitely scammers. Like, this is too crazy. Or some of them like, okay, like, walk me through it. Like, how has been their mentality towards this number that you're probably projecting, which is much higher than what I assume that that they're used to?
I would say, like, people have been less turned off. Just like, people have been more open-minded around the crypto thing. We have not had any experience where someone said, like, oh, crypto, you guys must be scammers, which is pleasantly surprising, honestly, because there's definitely still, again, like, I think the Bitcoin ETF changed how a lot of people think about, and also, like, the messaging from the presidential administration on crypto has given us a boost. But we have been pleasantly surprised to not have anybody make wild accusations or write us off completely on the basis of, you're crypto scammers, right? We haven't done any of that. Messaging it is, you have to be thoughtful. I think in telco specifically, we're lucky because the Helium playbook is not actually all that, crypto-y, if for lack of a better term. And if you look at the Helium community, it's not a lot of crypto bros. I mean, there's plenty of crypto bros, I'm sure, but there's a lot of, like, lifelong telco people in there, right? Lifelong digital infrastructure people in there who are like, I get Wi-Fi offloading. I understand a network of decentralized hotspots that you can basically delegate, for lack of a better term, Wi-Fi offloading to, and that makes sense. Crypto aside, that totally makes sense. And I think this is a beautiful thing about Deepin, and why I was so excited about Deepin way back when it was, not named Deepin, in 2015, and I was just getting introduced to blockchain. That's why I was excited about it, and I think that's why people take it seriously. Is, we're not talking about selling your users a bunch of speculative coins. We're talking about doing something that you, as the telco, understand how and why this works. And and so then you just kind of have to get comfortable with, like, what we're doing. And an important thing to note here is, that's the beauty of sort of buyouts, right? Is you're not usually, the seller is like, I mean, there's a lot of different situations that you could have, right? You could have a family-owned business where they're very sensitive to who the owner coming in is, but that's not really the kind of market that we're talking to. The market that we're talking to is, these are large corporations. They have somewhere between 5 to 50 million users, and they're selling for strategic reasons. They're selling because they don't know how to manage the asset anymore, or what have you. Point being, there's not too much emotion and sentiment around what we want to do with the asset, as much as, you'd have with, like, a family-owned business or something.
All right, you are the COO, but it's a small firm, so you're probably wearing, like, every hat possible. What is there like a normal day that you have, or is it just every day there's something new and something different? Give me your like average, if there is any day that you have in Inversion.
I would say it really changes week to week. I'm definitely wearing every hat right now, and Santi as well. It's everything between the basic admin of setting the company up and the hiring and the wrapping up our fundraising, to the acquisitions and plugging my network to get in with all of the potential deals that we should be looking at, and then digging into those acquisitions once we do get access to the teams. So it's all over. What I'm spending all my time on right now is, I mentioned like the 3 verticals of acquisition diligence. That's what I'm spending the most of my time on. We are looking at 13 companies at a very high level, and in touch with either their banking team or the management team, and then of those 13 that are sort of in our network, we're looking at 3 seriously, and there's 1 that we're looking at very seriously. And so we're sort of running diligence across the financials of the company, like the viability of the asset standalone, the telco playbook, and the fintech playbook. And there's a lot of work that has to be done to get from, we're going to offload all the data and reduce cost by 50%. Like, you can say that, and that sounds beautiful, obviously, but then you have to go dig super deep to get to like, how exactly are we doing that? How are we rolling that out, from month 1 to month 12? How are we ensuring user churn, etc.? And then same thing on the fintech side. How are we actually onboarding users? And so we're making like a ton of progress on that. Yeah, it's amazing that we're still a team of so few, but that's changing quickly. And we're hiring, we're being very picky, but we are hiring, as we would ideally hire as fast as we can. We're just very picky, which makes it kind of slow.
Yeah. How do you think about team building? Because what are these types of skill sets that you're looking for? Is it more PE background? Is it more investment banking, or just something totally different?
Yeah, honestly, it aligns to the 3 verticals. There's the PE financial side. So we have investors that we're hiring, CIO type that we have a lot of candidates for, and a team of, investment analysts that would report to that person. And then the telco side. So we already have a specialist, who worked at Gigs. If you know what that is, I like to describe them as Stripe for telecom. So we have a telco specialist, but building out, a pretty robust apparatus around the telco playbook. And that includes DPIN. Like, traditional telco is important as much as DPIN is. And then the finance side. And the finance side spans a pretty wide range, because like, you have to have the chain built out. You have to have the wallet interface and the product that's going to be reaching the consumer. And then you have to have the space in between, right? So like, you have the interface, you have the chain, and then like the applications, the integrations. So we have a pretty robust product and technical team that we're building out. And then also expertise in just consumer behavior in the region, and getting really deep insights across the region and how that differs. We actually have an internship program running right now. We have 6 interns, and each of them is a citizen of, and has boots on the ground in one key market that they cover as the dedicated market research analyst for that market. So that's been awesome. That's been running the last 3 weeks, and it'll go through the summer. And so that is how we're getting like a lot of really deep, great insights on like, here's how 50 housekeepers in Mexico think about their finance experience. Here's how 50 taxi drivers think about it. Here's how 50 students in Mexico, and we're going to repeat that across every LATAM, major region.
That's awesome. Okay. 10 years from now, where's Inversion?
Yeah. So we think that, 10 years out from now, Inversion, we think that our, the same pragmatic approach that we bring to our mission and our objectives as a company of like bringing crypto and blockchain to the real world in a thoughtful, and pragmatic way shouldn't stop there. We should manage, once we have a token, we should manage our finances similar to the way that, as a fiduciary, right? Like we will leverage the ecosystem that we have built to finance against it and go out and acquire more companies such that this does become an ultimate permanent capital vehicle, right? That's Inversion 10 years from now. 10 years from now, we have 100 plus portfolios. 100 plus companies in our portfolio. We have 1 billion users on Inversion chain. These are, maybe they love trading crypto. Maybe they have never traded crypto in their life, right? They're just regular users who appreciate the value attributes that on-chain brings to the front. On-chain tech brings to the front. 24/7 access to your finances. It's fast, it's low cost, it's easy to use, and that's the vision. And then we are, able to just kind of run that flywheel constantly over and over again. Berkshire on chain.
Amazing. That's awesome. All right. So how are you feeling about the new administration with their, kind of more pro crypto stance? Obviously there's been, things are still in the works, but I assume you're feeling very positive. But like, what does that mean for you guys? Does that mean like, okay, going full speed ahead, or, what is the approach?
I mean, look, clearly the new administration has made a huge difference for the M&A landscape and for the IPO market. That is what I would say has been the most tangible difference. If you put obviously like the rhetoric is helpful, the narrative is helpful, but in terms of what's actually changed, in my mind, it's like you have all these companies merging, you have all these IPOs coming down the pipes. And so that's super exciting. Does that really impact us directly? Maybe. I mean, it depends on how big we get. The way I think about Inversion is like the first SPV and the first deal we do is like crucial and we have to get it right. But after we do the first one and get the playbook right, I mean, the sky is the limit. There's so much that we can do. And we have a proven track record, right? Which makes everything so easy. Or it makes everything a lot easier, right? When you said, look at that example. We've already done it and we're just going to do it again. And so I think like you could see a world where the 10th SPV or the fifth acquisition that we make is one where it's huge, right? And it does require us to have some form of regulatory scrutiny in the US from like a deal making perspective. I think the current administration will be very helpful. I also think regardless of administration going forward, the precedent has been set, thank God. So yeah, we will hopefully be administration agnostic going forward from a deal making perspective.
Could you imagine a scenario? I mean, of course there could be a scenario, but do you believe there is a likelihood that you'll run into any sort of regulatory hurdles with, like overseas? Like, for example, you acquire some Mexican telco, and maybe the regulators there don't necessarily want all the users to have this type of fintech access that you guys are looking to provide. I mean, obviously it's like, it's good for the users. Like we like it, but maybe they want more control. Is that a scenario that you guys have thought about?
Tons. I mean, having spent, the first few years of my career in emerging markets, again, like that was a seat where LATAM politics and specifically how they impact the markets, everything from equities to fixed income and FX. I learned a very clear lesson, which is that this is like the absolute Wild West compared to the United States. You have a new president in Peru. They want to rip up, or actually a more realistic example. You have a new administration in Mexico that says, you know what? We want to make mobile super accessible. We want to roll out like a public network effectively. Imagine like a public AT&T, right? And we just want to make sure that all Mexican users have access to a plan like this. And so if you're a private AT&T in that moment, like this is hugely disruptive to you. And so, yeah, we're going to have to be super, super cognizant of the regulatory environments on both the telco and the fintech side. And we're targeting markets accordingly, right? Like there's a spectrum of risk and there's a spectrum of regulatory, and just political risk, frankly, across the LATAM region. So we're being thoughtful about that. And, one other thing that I like a lot is the telco piece of this and the fintech piece sort of hedge each other in some ways. And I think that's mostly true for the regulatory piece as well.
How have your personal views on blockchain, digital assets, et cetera, how have they changed over the years? Like, for example, like I went from 2013, I was like, oh my gosh, Bitcoin's amazing. Bitcoin should overtake the dollar, down with the Fed. I was very like radical in that sense. And really over the past 5 years, I've become much more of, okay, I see this technology as a great way for companies to make more money and for people to get better service and maybe make more money. But very like pragmatic, very simple. I'm no longer like down with the Fed. I'm like, oh, we actually need to work with the Fed, unfortunately. Did you have any sort of like, I mean, you came from Goldman, so maybe it's very different, but I want to hear your opinion. Like, did your views on crypto, blockchain, et cetera, did they change over time?
Absolutely. I mean, like I always believed in the tech. I always believed in the potential for the tech. I think it's like one thing that bugs me a little bit is like between crypto and AI. Like I don't feel competitive with AI at all. As someone who loves crypto and blockchain and doesn't focus too much on AI, although I love obviously the applications. Um, you know, I've never felt competitive. However, people love to point out like, oh, well, crypto, hasn't done anything, right? That doesn't have any use cases. And AI is like, it launched and then 20 minutes later, everyone in the world used it, right? Look, I have a lot of problems with this argument. One is that the true history of the deep tech being built out on AI goes way further back than the deep tech on blockchain, right? So like in many ways, blockchain is a much newer technology than AI is. And I think that gets overlooked a lot. I also think that when you think about the go-to-market between crypto and AI is complementary, right? Like you plug in an AI tool to enhance what you're doing, to add value onto what you're doing, not to completely foundationally disrupt what you're doing, right? It's a, workflow productivity tool. I mean, obviously I'm minimizing to a certain extent, but the point is that like any consumer can find out how much AI benefits them with like a click of a button on ChatGPT, right? The go-to-market there is so seamless because it's complementary. And blockchain is so different from that, right? Like with blockchain and crypto, sure, you can trade crypto tokens, but that's the only way that's the only consumer analog to the many, many, many consumer analogs that AI has. To foundationally appreciate what blockchain technology can do for your business, for you as a consumer, that uses Western Union and pays 5 to 50% that you can't afford on all of your remittances, right? The true value can't be experienced. And we have a negative flywheel here because no one's going to go build that if there's no case study, right? No one who has anything to lose is going to risk. They'll plug in an AI tool. Sure. Why wouldn't you? I can see how awesome it is. It works. It's effective. I plug it in. Done. Decisions made. Blockchain is like, okay, so you're telling me I have to move my whole infrastructure to this other infrastructure, which is going to be like, a massive undertaking. And I could come out looking like a total idiot. No thanks. Right. So this is the kind of like the negative flywheel problem. And I think I did not fully, I thought about like, crypto is not scaled the way AI has. It bothers me. But I didn't think about why. And like Inversion has pushed me to think about why. And so I think that's the biggest transformation. And I think on the crypto side, like I think Bitcoin is a beautiful tool. The way I like to think about Bitcoin and the way I thought about it and talked about it with investors in my former life is that, Bitcoin, people would ask, like, what do you think is the terminal value of Bitcoin, right? Like investors like to think about the terminal value, i.e. like at its, max, like what should the end value, when you run the model, what should the value of blockchain be? Or I'm sorry, Bitcoin. And the way I like to say that is, I mean, first of all, that's a ridiculous question. But second of all, it is the world's aggregate demand to hedge global risk. Like that's how I think about Bitcoin. It's like, what is the aggregate market demand to hedge like everything, you know? And so there's a monetary policy angle in that, baked into that thesis. There's a geopolitical angle baked into that. There's kind of, encompasses everything. So that's the market price of Bitcoin. It's like, what is that hedge trading at? And this is the same thing as like, a put option. There's a price for a put option. And the price for that put option is like the market's price on your willingness to hedge, or your demand to hedge a stock or whatever, right? And so I think Bitcoin is very similar to that. It's just a one delta product. So that's my thing on Bitcoin. But yeah, I think the major thing that's changed is that crypto story. And I think that a lot of cryptos will be eventually traded like stocks, like, not necessarily making a comment on whether or not there's securities or the regulatory status of them, but investors will look at them like stocks. Investors will look at stocks and then they'll say cryptos are just sort of like stocks on a different ledger. Like these are just like oil that run the protocols that we all use every day.
Suze, this has been incredible, but it's time for the closing questions.
I love it.
All right. If you could instantly master any new skill to help you with your business, what would it be?
Oh, this.
This?
Santi is like such an amazing orator. He's so good at talking, conveying messages. And, maybe it's the operator in me, but I am much more of like a doer than like a thinker and a talker, if that makes sense. So this is my practice that I'm getting in.
You're killing it. So it's definitely working.
Thank you.
All right. Is there a belief that you once held strongly at the start of your entrepreneurial journey, or your start of your crypto journey, let's say, that you've since changed your mind about?
Okay. Like I said, love Goldman Sachs, and there's a real place for TradFi to do tech. But I think it's important for people not to underrate the fact that post 2008, banks truly are in a proverbial way an extension of the federal government. And so at some point you have to get realistic about, how much innovation is going to come, how much leadership is going to come from, and actually I shouldn't say traditional finance, because it's specifically GSIBs, globally systemically important banks. So I think like the top banks, right? And there was definitely a time where I was like, this is like, everything we do is going to change the world. And I think the reality is post 2008, the federal government set a precedent that they will bankroll the banks, and like now everyone is operating accordingly. And so you compromise the GSIB's ability to really be a frontier leader when that's the case.
Essentially, they could if they wanted, but they are hemmed in by nature of their importance almost.
Yeah, it's just like the infrastructure for how things work between like the regulators and the banks fundamentally changed after 2008. And so, in that new world order, anyone can do what they want if they could, right? But the fact of the matter is like the regulatory threshold is different. And it's not a TradFi thing, right? Because I think people lump Goldman Sachs in the same bucket as like hedge fund A and like asset manager A. And that is wrong. Like that is, in my opinion, that's very wrong. I think it's like the GSIBs are way over here. And then there's sort of like there's a lot of different tranches after that. But it's the GSIBs that are, post 2008 in a totally new world order. And they will do amazing things, but it's just going to have to be at a certain pace.
All right. You are not allowed to work in Web3 or finance. What would you be working on?
Ooh, maybe like film. I feel like film would be really cool. I mean, I love to read, so maybe I would be like a teacher or a food critic. A food critic would be sweet.
Yeah, that's great. All right. Speaking of books, what's a piece of content, whether it be a book, a podcast, a movie, whatever, that had a major impact on you?
Okay. The Power Broker is my favorite book. The Power Broker by Robert Caro. It's all about Robert Moses and the man who, like, the power broker of New York City. I live in New York. I love New York. I love New York local politics, which I'm actually very involved with. And so that book just demonstrates how one person can create astronomical change in a heavily bureaucratically inundated system by being extremely like strategic and tactful. And it's a fascinating book on history, on politics. It's amazing.
Amazing.
Oh, and The Sovereign Individual.
Ooh.
Anyone who's in crypto, have you read that one?
Not yet. I need to.
Okay, you've gotta read The Sovereign Individual. It will speak to you, and then you're like, "Wait, this was written in the '80s? I'm so confused." Yeah, it's insane.
Amazing. Suze, thank you. This has been incredible. Where can people learn more about yourself and find more about Inversion?
Yeah, inversioncap.com. And then, on Twitter, like I said, back to my skill that I'd like to master, becoming more publicly visible is on my to-do list at Dannheim, my last name. And then Santi and follow Inversion Cap as well. Santi's pretty easy to find.
Amazing. Thank you, Suze.
Thanks, Andrew. Appreciate the time.